In this lesson, we are gonna cover what currency pairs are. Which of the many currency pairs do we actually choose to trade? And focus on how to read a Forex quote. And then we're gonna finish off by looking at what pips are and how we measure them. Because this is a vital part of the risk management process. So, as a Forex trader, the first thing you need to learn about is your product, right? And that is currency. Now, while there are lots of currencies that you can trade, most active traders focus on the 8 major currencies of the world. The United States dollar, the euro, the Japanese yen, the Great British pound, the Australian dollar, the Canadian dollar, the Swiss franc, and last, but definitely not least, the New Zealand dollar. Now currency symbols, they always have 3 letters, where the first 2 identify the country, and most of the time, but not always, the third letter represents the name of the currency. So take the New Zealand dollar, for example, NZ. The NZ stands for New Zealand, and the D stands for the dollar. Pretty simple, right? So, as a currency trader, you may be presented with the opportunity to trade more obscure, exotic currencies such as the South African rand. Now, I would strongly advise that you stick to the major 8 listed here, as these currencies have the highest trading volume in the FX market, and high volume means that transaction costs are generally lower, and the more people are trading those currencies, leading to higher liquidity, which is vital when you need to exit a trade. There is simply no need to risk your capital taking a position on those high cost and those low volume exotic pairs. Now, an individual currency, it does not have an absolute value. So the only way that you can value them, if you have to compare them to that of another currency at any given time, so are therefore always quoted in pairs. A currency pair is simply the quotation of the relative value of a currency unit against the unit of another currency, right? You always have to pair them together, just on its own. There's no way of putting a price on it essentially. So an example of a pair would be AUD versus USD. So the Australian dollar versus the US dollar, which is commonly referred to as Aussie dollar. So if you were to buy the Aussie dollar in Trader Talk, you would say that you were going long the Aussie dollar. And another term that will become a common part of your vocabulary, now that you are a trader, is bullish. So, you say that you are bullish on a currency pair, or whatever asset class you are talking about, if you think it is going up. So when you buy this currency pair, Aussie dollar, you would be buying Australian dollars while simultaneously selling US dollars. So, this means that you would profit from how much the Australian dollar appreciates, so goes up in value in comparison to the US dollar. And if you were to sell the pair, this means that you were going short, and you would say that you are bearish on a pair if you think it is going down. Now, know you're probably a bit new to trading. It can be a little bit confusing if it's the first time you've heard some of these terms. So an easy way to remember the difference between bullish and bearish is that when bulls attack, they swipe upwards with their horns, and when bears attack, they swipe downwards with their paws. Alright. But anyway, if you were to sell the pair Aussie dollar, you would be selling Australian dollars, while simultaneously buying US dollars with them, right? Now, that can be a little bit confusing. Fortunately, your broker will take care of this. You know, the simultaneous buying and selling at the same time. They take care of that so that you can simply focus on the pair as a single trading instrument, just like a stock. So, on your execution software, you literally either just click buy or sell on the pair as a whole. So they make it super simple for you. Now, don't worry if it seems a little bit confusing at this point, because we're gonna cover specific instructions on executing trades in the later lessons. Now paired up in every possible combination, the major 8 individual currencies, they deliver a total of 28 tradable currency pairs. And of these 28 pairs, those that contain the US dollar, those are referred to as the majors. And the remaining pairs that do not contain the US dollar, they are commonly known as minors or crosses. Now, you may hear many of the major pairs referred to by traders with certain nicknames. Australian dollar versus the US dollar are simply Aussie. Pretty simple. Pound dollar is often referred to as cable. And this is because back in the mid-19th century, before the invention of satellites and fiber optics, the exchange rate between the Great British Pound, a sterling, and the US dollar, it was actually transmitted across the Atlantic Ocean via a submarine cable. So this is what essentially traders refer to as. But then, when the euro was introduced not too long ago, in the late 1990s, probably when some of you were actually born, a trader simply upgraded the old cable to a state-of-the-art fiber optic line, hence the ingenious name fiber. Then we have Kiwi dollar simply as Kiwi dollar, CAD as Loonie, dollar Swiss as Swissy, and dollar yen as Ninja. Now with the Frosten strategy, you will find that there is literally an overwhelming, at times, an overwhelming abundance of opportunity on literally a daily basis, on even just one currency pair alone. So if you want extraordinary results, it is highly advised that you narrow your focus onto just one, or even a few pairs, and really spend time mastering those. Now, we're gonna discuss this in much more depth in a later module on the course, when you start to put your trading plan together. But some of the main pairs that most traders in our community focus on are euro dollar, pound dollar, Aussie dollar, and pound yen. But yeah, don't worry too much about that just now. So when pairs are quoted, the currency on the left-hand side is always called the base currency,